Bitcoin goes up, goes down, it has a variance, right? And so I think this way of looking at this thing stochastically and understanding this variability of something, if you don't have basic probability and basic statistics, you have no framework to understand that. It just
Exactly.
it's you're handicapped.
And that's
And
kind of
so
that's
it's
kind of
more
what.
that it's more that that's useful and not so much, the simplex method, which you probably won't use these days, but the understanding the framework for all this stuff is super useful. And I keep on finding uses for it, like the mathematical framework all the time.
Bitcoin's value is anything but deterministic. It thrives on volatility. One day it soars to unprecedented heights. The next, it plunges, leaving investors scrambling to understand its unpredictable nature. This variability isn't random chaos. It's a stochastic process, a concept from probability and statistics that describes systems governed by chance. Like much of our universe, Bitcoin operates in an environment shaped by probabilities, not certainties. In this explosive interview, popular crypto analyst Fred Krueger explains how Bitcoin's wild price swings reflect a mix of market sentiment, regulatory news, adoption trends, and macroeconomic forces. For example, in 2017, Bitcoin skyrocketed to nearly $20,000 before crashing by over 80% in 2018. In 2021, it climbed past $60,000, only to drop sharply again. Such fluctuations are not anomalies, but integral to its nature as a decentralized, speculative asset. Understanding Bitcoin's volatility requires a solid grasp of statistics and risk management. Without this framework, one remains handicapped, as interpreting the patterns of Bitcoin's movement becomes impossible. The ups and downs may appear arbitrary, but for those equipped with the tools of probability, the variance can be studied, measured, and even anticipated. Bitcoin's story is not about certainty, it's about adapting to the unpredictable and embracing the opportunities volatility creates. Let's watch clips from Fred Krueger's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Leverage is going to get you in trouble every single time in Bitcoin. Like everybody who blew up, they all blew up because of leverage, right? That's why they blew up. It took me a while to really understand Bitcoin, the value proposition, and B, how to play Bitcoin, which is you do not trade Bitcoin. I do think that the one thing that gets people is this leverage, and it's just completely unnecessary because I don't care how much big your stack is. You really do not need to borrow 2x on it. There's just no reason to do that, right? And it's pretty simple math. Bitcoin can drop 50%. It can, and people are like, well, it can't drop 50% from here because it can only drop 50%. Well, you don't know that. It can drop 50% from anywhere. From any point, you have to have the belief that Bitcoin can drop 50%. And even if it's at the bottom of the support of some model, it can still drop 50%. It's a highly volatile thing, which can drop 50%. So if something can drop 50%, now it also tends to over time go up a lot. It is a very high performing asset, right? But it's an asset that can drop 50%. So if you are leveraged 2 to 1, there is a non-zero probability that you are going to get completely and utterly wiped out, over time. And, it's amazing how many people didn't get that memo. Just over and over and over and over again. That, I'm going to dart in and out. I'm going to be smarter. I'm going to wait. Well, you all these things may be true, but you're playing with fire, and you shouldn't play with fire. What you should do is you should take some percentage of your net worth and just put it in Bitcoin and literally not touch it until that thing is 10x. You should not have a situation where all of your money can get wiped out by some wick down. And you could say it'll never happen, but by definition, you need to compartmentalize things so that whatever you're doing, nothing can happen. And whatever you're saying is that black swan, we've lived through enough black swans now to know that black swans happen. And they happen not only with Bitcoin, they happen with finance. I mean, they happen all over the place, you know.
Fred Krueger warned against using leverage in Bitcoin, emphasizing that it leads to financial ruin. He explained that Bitcoin is highly volatile and can drop 50% at any time, regardless of support levels or market trends. If someone is leveraged 2 times, a single drop like that could wipe them out completely. Krueger urged investors to avoid the gamble, saying the probability of total ruin, though small, is always present. Instead, he advised allocating a percentage of one's net worth to Bitcoin and holding it long-term without touching it. Fred Krueger emphasized that crashes are inevitable, recalling the 1987 market crash, Japan's 1990 collapse, the 2008 financial crisis, and crypto crashes in 2017 and 2022. He highlighted today's economic instability, citing global debt and uncertainty, advising against overcommitting to Bitcoin. Even for bullish investors, he recommended a 60 to 70% allocation to allow for opportunities during downturns. Inspired by John D. Rockefeller, Krueger stressed the importance of dry powder, reserves for emergencies or discounted investments, urging caution and flexibility in an unpredictable world. Let's watch more clips from this interview.
As a guy's been in finance, what did I see? I saw the October, 87 crash. I was there, you know. I saw the Japan crash, right, in 1990. I was there, you know. Floor of Nomura Stock Exchange the day it crashed, you know, the day it peaked. It didn't completely crash in one day, but you know, so I saw the crash of the Japanese market very closely. You know, the great financial crisis crash, saw that, was there, been there, done that, you know. And now you get all the crypto crashes, right? 2017 was there, that 2013, I wasn't big enough that it mattered. It was insignificant for me. But, you know, and then 2022, you know, been there, lived through the crash, right? So, you know, I've been through all these crashes, and the learning is crashes happen. Crashes. And so, you know, do I think that there will be another crash in the next 5 years? 100%. There's going to be, we are living in a very unstable world, right? The financial world is unstable. $35 trillion in debt, 122% GDP is unstable. You know, there's a lot of things that are unstable now with this world. So holding Bitcoin and having leverage with it is unstable. So you have to allow for a lot of instability in this world. And I think it can be positive, right? It can work to your advantage. And that's why I would recommend people not be 100% in Bitcoin, right? I think, you know, we've talked about this kind of independently, you know, using the Kelly criterion or some other criterion, but you should be something, you know, even if you're mega bullish on Bitcoin, you should be something like 60 or 70% invested in Bitcoin. That's it. You should never be beyond that, right? Never, ever, right? Why? Because if it totally crashes, you're going to want to pick some up. You want to have some dry gunpowder, right? Maybe you're going to be able to buy some crazy miner for, you know, a third of the price of the mining equipment. You know, it's you know, I'm reading this book on John D. Rockefeller right now, and you know, he got really big in 1872, and there was this crisis in the oil world, and basically you'd walk to these other refineries, and he would be like, okay, I'm going to buy you for 1/4 of the cost of your equipment. And people would be like, well, why should I sell to you? It's because you're either going to get that and you're going to grow with me, or you're going to get nothing. I'm going to wipe you out. Your quarter is going to go to zero. So if I were you, I would just sell to me. And everybody did it. And he was right. And they actually did very well. The people who did sell to him did very well because, you know, so, you know, I just think you need to have dry powder. And other, you know, just and also personal things can happen to you. You can get, you know, you can get divorced, you can get a lawsuit, you can get hit by a car, A lot of things can happen to you. And we're just living in a very, especially now, we're living in a very uncertain time. And I think you need to plan accordingly.
Bitcoin has surged to an all-time high of $108,315, with traders eyeing the $110,000 mark. Driven by optimism surrounding Donald Trump's crypto-friendly regulatory stance and macroeconomic factors like expected monetary easing, Bitcoin has risen over 150% this year. Institutional interest, such as MicroStrategy's continued purchases and its inclusion in the Nasdaq 100, has further fueled the rally. However, as Fred Krueger emphasizes, these euphoric highs are not without risk. Bitcoin remains highly volatile and has historically experienced significant crashes, sometimes losing 50% of its value in short periods. While traders flock to capitalize on new highs, leveraging positions to amplify returns increases exposure to catastrophic losses. Krueger's insight highlights that crashes are inevitable, whether due to economic instability, unexpected black swan events, or market corrections. The world today is financially unstable, with soaring debt levels and geopolitical uncertainty exacerbating risks. Krueger advises holding Bitcoin as a long-term investment without leverage, allocating 60 to 70% of one's portfolio at most. This strategy ensures investors retain dry powder, cash reserves, to capitalize on market crashes and opportunities, akin to John D. Rockefeller's approach during economic crises. As Bitcoin enters a phase of price discovery, cautious optimism is key. While the market's potential remains enormous, prudent investors must balance risk, stay diversified, and plan for volatility. In Krueger's words, crashes happen, plan accordingly. As we wrap up, how do you think Bitcoin's volatility compares to other financial assets? What other macroeconomic factors do you think influence Bitcoin's volatility? Let us know your thoughts in the comments below. Share this video, and don't forget to hit the like button. Thanks for watching, and don't forget to subscribe.